Hey guys, how's it going? Lee here. What can I say? The past couple of days has been insane in terms of stock market talk. I've been waking up at 3 a.m. in the morning, Australian time, just to keep up with all the news and see what's going on and to see what all the professionals have had to say. One of them being Chamath, who I wanted to go through some of the interesting things that he points out in the interview with CNBC. These are just short snippets, of course. There is a whole 33-minute interview, which I might upload, who knows. Now, luckily for me, this coffee and this Marvel Cup has been keeping me awake, but let's see what Chamath has to say, and yeah, let's get right into it.
Next guest, he tweeted on Tuesday that he'd gone long through call options. Chamath Palihapitiya is the CEO of Social Capital. He joins us now on the phone. Chamath, thank you for being here.
Hi, Scott. How are you?
I'm good, thanks. So you tweeted yesterday that you bought $115 calls in Gamestop. Can you tell me what your position is as of this very moment?
Yeah. Can I tell you a little story before all of that, or no?
Why don't you tell me that first, and then we'll go from there.
So this morning I woke up after spending all last night in Wall Street bets, reading about all of this stuff. I ended up closing up my position this morning, and I wanted to announce that I'm taking all the profits that I made, plus my original position. So I'm going to take $500,000, and I'm going to donate to the Barstool Fund for Small Businesses. But I really want to tell you, beyond the $500,000 donation or the money that I invested, which was, not a huge amount in the grand scheme of that stock or the entire market, what I learned, because I think what I learned over the last couple of days is important for everybody that's watching CNBC.
And that is?
I think that what you're seeing is essentially a pushback against the establishment in a really important way. You have a lot of people, and I would encourage anybody who is dismissive of this thing to go into Wall Street Bets and actually just read the forums. And I think that you're going to see three kinds of posts. The first kind of content are a lot of people doing some incredible fundamental diligence on companies, trying to think about long-term value. And in my opinion, many of them are doing as good and, frankly, a better job than a lot of hedge fund analysts that I work with. That's number one. The second are a lot of people who believe that, coming out of 2008, what happened was Wall Street took an enormous amount of risk, and they left retail as the bag holder. And a lot of these kids were in grade school and high school when that happened. They lost their homes. Their parents lost their jobs. And they've always wondered, why did those folks get bailed out for taking enormous amounts of risk and nobody helped and showed up to help my family?
Two real key points in that one there. The first point is that, well, there are some people who are doing some research in the Wall Street Bets or any type of Discord forums, because there's a bunch of them out there that are doing just as good of a job as a lot of these hedge funds. Well, there's some truth behind that. There's a channel called Dumb Money. Now, these guys actually created some of the programs and the algorithms for a lot of these hedge funds. And when they first introduced them to the hedge funds, they realized that a lot of these hedge fund guys don't even know what they're talking about in terms of trends and things that are happening within the market, because they have a tight framework that they have to work within as part of the fund. And the Dumb Money guys also have a Discord who have a ton of people who are in there who do high level amounts of research on the new trends that are happening also, and they've got their own algorithm that's still going within the Wall Street Bets and just Reddit all over the place to see what's trending. And so yes, there is parts of Wall Street Bets where there is a high level of research because some of them are actually former hedge fund people. Now, to the second point of what Chamath had to say, a lot of people in 2008 and 9, especially in these funds, made a crap ton of money. A lot of them also lost a lot of people a lot of money. And what happened was, well, you had a lot of these retail folk, or the people who had the mortgages, homeless. They didn't have a home, they didn't have a place to go to, there were jobs that were lost because companies had lost a ton of money, and so they had to lay off people, if not went bankrupt themselves. And now that we have Wall Street Bets, and we're defending these institutional players with a ton of money, well, who have gone short, well beyond the amount of stocks available. It's a bit of a joke to me, but obviously that CNBC, has a certain agenda, okay? They have a certain agenda, depends on where the money's coming from for that time, but I'll just leave it there, okay? Let's just keep going with the video.
And then the third thing is a realization that instead of having idea dinners or, quiet whispered conversations amongst hedge funds in the Hamptons, these kids have the courage to do it transparently in a forum. And I'm not saying all of it is perfect by any means, but I think it takes an enormous amount of faith in the system to be that transparent, to talk about things, and then for each individual to make their own mind up and to do things, whether it's to buy and to sell.
You can see that Chamath closes there with faith in the system and being free to buy and sell. I mean, isn't that what capitalism is all about? Being free to be able to do that? But now you've got TD Ameritrade, you've got Charles Schwab, Robinhood, a few other companies coming out and restricting people's abilities to trade. And I'm not talking about margin. With margin, I totally understand because it's not your money and somebody else has to cover it. What I'm talking about is restricting people's ability to buy stocks with their own cash that they already have. That doesn't make sense to me. That is the opposite of being free to trade or do whatever you want, especially when it's your own money, which puts into question, is it your own money? Be condemned! Now, in regards to what Chamath had to say about the private table talks, it's so good, and I think it really does break the poverty cycle for a lot of people, because if you've seen, I saw one of the posts on Wall Street Bets was that a student was able to pay off all their student debts with the profits that they made on this. Now, what I will say is there are going to be winners and losers on both sides. That's no doubt a given. There's going to be winners and losers, okay? Even if they are retail or institutional. But for many people, this is what's going to break the poverty cycle. Now, if, let's say, these private dinner table chats continued and, there was no Reddit, there was no Wall Street Bets, well, these big institutions with big money would continue to make even more money and that wealth gap would widen even further. And this is an idea that Chamath also touches on a couple of times. You need a free market. You need public forums where people can come on and have a chat about these type of things. And I don't know about the whole accountability fact just because you're in a public forum because, well, end of the day, they are just avatars and people behind their keyboards. And so although I appreciate the information sharing, I don't know about the whole accountability thing. I'm there, just not 100% on board.
I think that what it proves is this retail phenomenon is here to stay. There are 2.7 million people inside of Wall Street Bets. I think that they are as important as any hedge fund or collection of hedge funds. And I think the most important thing is that in a world of zero interest rates and quantitative easing, I don't know how you can run a typical hedge fund strategy and make money anymore. Because, for example, when you looked at Gamestop, a normal person would say, how can you have 136% short interest? How can you be short 40% more shares than actually exist in the world?
If that's not manipulation in the market, I don't know what is. We're talking about retail investors manipulating the markets and whatnot. But what happens with, these big funds that have 140% interest? That's over the amount of stocks available for them to short. That they have 140% shorted. And I know what Scott's probably going to say. He's going to go, oh, well, maybe this is for the regulators and whatnot. They should probably look into it. Yeah, but why was that never pointed out before? And it takes somebody like Chamath to come on to point that out to big media. I don't know. I'm just saying. Not very fair.
Listen, that doesn't make any sense. But to a Wall Street mathematician, that's the game that has been played for years. And that game came undone.
Well, I mean, that may be that may be somewhat of an extreme example. Let me just go through a couple of things you said here. I have a hard time believing. I mean, you suggested that there's a good amount of fundamental research going on underneath the GameStop Reddit situation. Do you truly believe that there's actual fundamental research? Not to disparage in any way the people who are actually making these trades, but this seems to be momentum rather than a deep fundamental analysis.
Scott, there's momentum in traditional hedge funds and how they move stocks as well. But it's really disparaging if the starting position is these guys can't do the same quality of research as an analyst in a fund. That's just not true.
I didn't say that. I didn't say they can't do that kind of research. I'm questioning whether they're actually doing the research when it comes to things like GameStop and AMC and some of these other things.
There's a distribution. And obviously at one end, there are fundamental analysts. But on the other end, there are momentum traders that follow trends. But by the way, the dirty little secret of Wall Street is that exists in hedge fund land. The reason why this GameStop trade has caused so much pain is because at the top of the pecking order was Melvin Capital. Those guys were incredible stock pickers. They are incredible fundamental modelers of companies. Okay, Gabe Plotkin is one of the sort of giants of our era, of my era, right? But at the end of the day, what happens is, irrespective of what he puts on, his trades are mimicked and copied by umpteen other hedge funds that follow along.
And what Chamath is trying to point out there is that the whole momentum swing thing is flawed. The argument is flawed because hedge fund managers also do this. You know, on the top of the pecking order, somebody does it, they're very well renowned, very well researched, and then what do the other guys do? They follow the same. And what happens when you have millions and billions of dollars plow into the one stock or a couple of stocks? Well, they either start moving up or they start going down, right? Depending on the position that they take. And so to say that retail investors are doing this, it's a bit ironic. Like, the whole argument that CNBC is putting up is really, really ironic. Okay, well, this is going to go on for a while. The whole interview is 33 minutes. I might put it up on my YouTube channel just because it's really hard to find. I haven't yet found it on YouTube as, you know, frequently. So I might put it up there for you guys to watch. But very, very interesting insights. Extremely interesting. And a lot, you can see where big money is coming from. It's just so ironic when the little guys are starting to win, which is funny because, you know, Robin Hood. Rob from the rich, give it to the poor. And yet here they are stopping people from trading these stocks, even with their own money. Putting restrictions on AMC and Gamestop. Anyways, guys, I hope you guys enjoyed it. Leave a like, subscribe to the channel. Otherwise, I'll see you guys next time. Cheers.